Hello, everyone, and welcome back to the Forex Market Recap and Forecast. It's January 4th, 2025, and we've got a packed episode today. Whether you're new to trading or a seasoned investor, there's something here for you. We'll be diving into key market movements from today and giving you an outlook for the next workday. So grab your coffee, get comfortable, and let's get started. Alright. Let's kick things off by talking about what happened in the market today. First up, the US dollar index. We saw some interesting action with the greenback holding steady at 103.5 after a slight pullback earlier in the week. The market is still digesting December's employment data, which came in mixed. On the one hand, job growth is slowing, but wage inflation remains sticky. The dollar's strength is facing pressure, especially with the Federal Reserve hinting at a potential pause in rate hikes. The euro traded higher today, closing at 1.0840. It's benefiting from the softer dollar and some hawkish comments from the European Central Bank. Inflation in the eurozone is still running above target, and ECB President Lagarde reiterated the need to stay vigilant. Traders are now pricing in at least one more rate hike this quarter, which gave the euro some momentum. The pound was a bit of a mixed bag today, hovering around 1.2620. While the Bank of England is grappling with a slowing economy, inflation isn't cooling as quickly as they'd like. That's keeping rate hike expectations alive, but there's still uncertainty about how much room they have to tighten without tipping the UK into a deeper recession. The yen weakened slightly to 132.50 against the dollar. The Bank of Japan is still the odd one out among central banks, maintaining its ultra-loose policy. However, whispers about a potential shift in their yield curve control strategy are keeping traders on their toes. If BOJ Governor Ueda surprises the market, we could see a significant move in this pair. The Aussie dollar edged up to 0.6775 today. Stronger than expected trade data out of China supported the move, as Australia's economy is heavily tied to Chinese demand. However, any signs of slowing growth in China could quickly reverse this trend. Gold prices climbed to $1,930 an ounce, benefiting from the dollar's slight pullback and growing geopolitical risks. Crude oil also made headlines, with Brent crude inching up to $83 per barrel. Supply cuts from OPEC Plus are still propping up prices, even as demand concerns linger. Now let's shift gears and look ahead to the next workday, which will be Monday, January 6th. Here's what's on our radar. First up, we've got the US ISM Services PMI data coming out. This is a key indicator of economic health, and a stronger than expected number could give the dollar a boost. Conversely, a weaker reading might fuel expectations for a Fed pause or even a cut later this year. In Europe, watch for German factory orders data. Germany is the Eurozone's largest economy, and this report could set the tone for euro trading early in the week. From China, we'll be keeping an eye on trade balance figures. Any signs of a slowdown could weigh on commodity-linked currencies like the Aussie and Kiwi. For euro to US dollar, the key resistance level is 1.0880. If the pair breaks above this, we could see a push toward 1.10. On the downside, support lies at 1.0780. For pound sterling to US dollar, resistance is at 1.2680, while support is around 1.2550. US dollar to Japanese yen traders should keep an eye on 133.50 as resistance and 131.80 as support. Heading into next week, sentiment will largely depend on how traders interpret the incoming data. For now, it seems like risk appetite is holding up, but that could change quickly if we get any surprises. As always, make sure you're managing your risk and keeping your position sizes in check. That's it for today's episode, folks. Thanks for tuning in to our Forex market recap and forecast. If you found this episode helpful, don't forget to subscribe, leave us a review, and share it with your fellow traders. We'll be back on Monday with more insights to help you navigate the markets. Until then, happy trading and have a great weekend.